Rolling down a backwoods, Tennessee byway. One arm on the wheel. The other arm is playing Activision. We got ourselves some video games right here. You know, I like that Call of Duty, Crash Bandicoot. So Activision has, let's see, I had the chart up here. Look at Activision Blizzard. Whoa, Geronimo, look out below. So we're at 71.89, down $3.35 or 4.45% today. And this would be ahead of earnings that they will be reporting today. Today, after the market closes, Activision Blizzard will report their earnings. That makes me very nervous. So why then, Bart, are you considering making a trade right now on the Activision? I don't know. It just something tells me it's going to be a good earnings report. So you see what it's done today. It's gone down, but it's been sideways for the last several hours. But if we look at the trades, if we trade the old Activision, sell the puts expiring February 10th, which would be this Friday, you can see how high the premiums are, which of course then means how high the volatility is. If we look down here at 91% probability, chance of profit, 91%, it's at 25 cents, which of course we know, get out that abacus, we know it's 25 cents times 100 because it's 25 cents per share. One contract for the options is 100 shares. But look at that implied volatility. Holy moly. So it might normally be, who knows, 30% right now because of the after hours report of earnings. That implied volatility is through the roof. And look at that delta. We got an 0.8 delta. So that, again, how I look at the delta is fairly simple because I'm a simple-minded person, that there's an 8% chance that this trade would finish in the money or worse for us, meaning that it would be blowing through this $63 put option. But I just don't feel like it's going to happen. But let's look at, if we look at the same number, 63 bucks, okay, it's currently at almost $72 a share. If we look at $63 strike price and go out another week, so it'd be 11 days out. What do we see there? So it's only at 36 bucks. And the volatility has come down dramatically to, it's still high, 64% still high, but down dramatically to 64% from where it was. But the difference is you're out another week. So this would be a week from this coming Friday, and only collecting a difference of, what was it, 12 bucks? $12 bills? 63, get you 25. So you know what? I'm going to put 5 on it. Now I'm actually just going to put $6,300 on it. $6,300 up. Because we would enjoy owning Activision, I think, if they're able to work things out and Microsoft does indeed acquire them. I think it's going to be good for both companies and good for us as the consumer. So let's just check it out. If we can get ourselves, what do we want to try for 26 cents? How about that, Bart? Let's get 26 on the old cash secured put. And do we get action? We do not yet have action on that, Jackson. We'll leave it there for a minute, see if that gets filled. In the meantime, let's take a look at what our friends over at the Alpha Spread have to say about Activision. And they currently have a intrinsic value of $63.60 on the best case. Worst case, hey, wait a minute. Worst case, they say it's overvalued by 32% down here. But best case, how about this? 120. I think we'd only see anything sniffing close to that would be if Microsoft did indeed acquire them. So let's go back to the base case. Relative value, 64.21. Discounted cash flow, valuation of 62.98. and we're looking to be at the $63 mark, but pretty much looking for it to expire worthless prior to it getting down to 63 bucks. So that will be an interesting situation right now. So we just replace it. I told you before, I'm fairly impatient when it comes to the options because I like to just make my premium and move on to the next trade. So let's go for the 25 bucks. What in the world? Why has that not been filled? That one we're leaving. We're going to leave that one and look at our next case here. Oh, no, don't even say it, Bart. Don't say Walgreens. Nobody likes Walgreens right now. Well, I do. I do. I like the Walgreens. I know what they do for a living. I know how they earn their money. And they have an ex-dividend date coming up on February 15th. I'd like to get some more shares. Let me see. What do we have? We have 1,000 shares of Walgreens now. I wouldn't be sad to get a few more shares and collect that sweet divvy. 5.18% dividend only at a 42% payout rate. So there is our ex-dividend date with a payout date of March 10th. Collecting that 48 cents a share. So right now I got 1,000 shares. If we added a few more, that wouldn't hurt my feelings. It's down again today, which makes it a good day to do what? That's right. Drum roll, please. Sell some puts. So let's go up here to the Walgreens. Like we did sell that contract of the Activision and we got the 25 bucks. Let me make a quick note of that. And that is Activision with a 2/10 expiration at $63 strike. Okay. Walgreens. What does Walgreens have to say? Now, Walgreens, of course, always will have less volatility unless they have some craziness happens over there. Even during their earnings, their volatility isn't going to come close to what Activision's is right now. And if you look where I'm at on so I've got 100 shares in Robinhood, and then I have 900 shares in Vanguard. And I think that, let me look at my Walgreens notes. On the Vanguard, let's see here. What do you got to say about that? The Walgreens. Yeah, these are paper notes. I'm shuffling through. So my average cost over in my 900 shares at Vanguard is $36.21. So not sitting very well with my 100 shares here at $40.50 because look at where the market price is right here. But let's take a look at some trades. Let's see what kind of premium Walgreens is offering up for an expiration of this Friday. If we look down to 35 bucks, which gives us an 87% chance of profit, we're at $7, and then the implied volatility is only 29. That's all right. But again, if we're going to make this play, hoping to maybe be put the shares at just a little baby discount, do we go to the 36? I don't know. That's pretty risky, Bart. I think it's a risk worth taking in this scenario because we're only going to do 100 shares. We'll get 31 cents off the top. We'll get essentially, if we get it at $36, if we put those shares at $36, then we would also look to basically get a 31-cent discount per share there. So we would take that, won't we? Because we'll need to own it prior to the February 15th dividend date, ex-dividend date, because you have to own it the day before, the business day before that. So we would need to own it no later than Valentine's Day. And the next expiration day would be after that ex-dividend date. So we would not qualify for that dividend. So we'll just, we'll roll the dice and take our chances right here at $36. Break even would be $35.66. Let's see if we can't collect $31 in premium right now, right before our very eyes. Will we collect ourselves $31? We will. So there's $31.36 strike and a 2/10 expiration on the Walgreens Boots Alliance. Now, another one that I was thinking about today, but I'm just too nervous about is VF Corporation. If I look over at my handy dandy handwritten notes, we currently have, I think, 500 shares. Yeah, 505 shares of VF Corporation. And I know I've spent a lot of money with them over the last few years on my dopey kids with their Vans and their Northface. But, excuse me, but I have a feeling that VF Corp is going to miss on their earnings. That is tomorrow. I think it's tomorrow after hours. So in another day, they're already down today. We could make a play there, but I think it's still going to go down because I think they're going to miss on their earnings. But again, depending on what the guidance is, it could be, miss top, bottom, and have a dusty looking guidance. And then we have an opportunity to get some more value on the VF Corp. So we're going to stay put on that. We're not going to make a move on VF today, but we will take a look at it after earnings. So just remember that number, 28.71. We're hoping that this is going to be a lower number, and then we will also sell puts on top of it to earn some premium and maybe get an even bigger discount going into that trade. So now our friends over at the Googler, I want to take another look at the Google. You know how I like the Google, and they don't pay me a dividend to hold them, but they do pay me premium to trade them, and I don't mind owning them. They're a very good company. In fact, let's take a look over here. I was looking at this earlier. This is the balance sheet for Google, aka Alphabet, currently down $1.90, which is 1.81% for today. And look at all the cash they're sitting on. Hey, look at this money we got piled up, $21.8 billion. And then our short-term investments earning interest there, $91.8 billion. And look at that, do-re-mi. That's a lot of cash to be sitting on. So one day in the not so distant future, they will be paying us dividends. Until then, we just got to trade our way into some premium, which we can just call dividends because that's fun. So they're ticking up just a little bit there. Let's take a look at the premium options for the Googler. If we sell a put, if it expires this Friday, I want to be under 96. So I think we got a position at 96, don't we? If you saw the previous video from Friday, I think we're in at 96 for February 17th. I'd like to be at 95, but I don't want to put up $9,500 for $8 in premium. So let's look ahead to next week and scroll down to 95. So yes, there's our position right there for that we took out on Friday. So next is 95, 90% chance of profit, $34 premium. We will try to get in on that action right there. $34 premium. We would be perfectly fine owning Google at $96 or $95. Even better at 95, right? Yep, that's right. Pretty good math. So, did that trade happen? It's hard for me to do two things at once. Yes, it does say on my phone, your order to sell one contract of Google, $95 put expiring on 2/17 has indeed been executed. So, hold on, there's a text from Sparkle Barbie. Save that for after the video, Bart. Okay, I will. So we did collect $31 in the premium right there on the Googler. And let's see, my son, Kid 3, a.k.a. Bart the Second, a.k.a. Deuce, he's going to be home soon, and him and I are going to go to the gym together. So I'm going to have to wrap this up right here. We got Monday, February 6th, 2:38 p.m. That's Central Time. So there's 22 minutes remaining in the market. So just a couple of trades there. I got a late start in taking a look at things today. I'm so busy. I'm just so busy around here. But we wanted to look at Walgreens, VF Corp, Activision, Google. We did end up making trades on 3 of those. Fairly conservative. But we'll come back, check on some things tomorrow. And thank you so much for tuning in to this episode of The Wealth Snowball with your new best friend in stocks, dividends and options. That would be Bart Divvy, aka the abdominable. I can't even say it with a straight face. The abdominable dough man. Really? Are you really calling yourself the dough man? I don't know. It just sounds funny. It's the wealth snowball pachinjan rim shot. That's enough, Bart. Time to click goodbye. So I will say goodbye. Have a great day, and I will see you in the next video. Please subscribe, like, leave a comment, share it with a lovable person, and tune in again next time. You can tell there's no editing that goes on at all with these videos. So we'll get better as time goes. See you next time.